Hello, everybody, and welcome to the Texas Real Estate and Finance Podcast. My name is Mike Mills, and I am joined today with Brad Bingham of Allstate Insurance. And without all of the time-consuming intros, we're just going to kind of jump right into everything and get rolling here. So, if you guys have been paying attention to your car bills or your home insurance bills, you have noted that increases in insurance has gone through the roof. And especially here in Texas, we've seen pretty dramatic price increases across the board. And it's not just one company, it's all of them. And, just to give you a little historical preference or a historical reference on this, I got something here that says in 2023, insurance companies in Texas requested over 150 double-digit rate increases, with some as high as 73%. And the trend continued into 2024 with 74 additional double-digit increase requests. So these requests—
is that auto, home, both?
I think it's just kind of— no, I'm sorry, that's homeowners specifically. Okay. Yeah, that's homeowners specifically. Yes, and it says cumulative between 2014 and 2023, the number of double-digit rate increases requested in Texas surged by 560%.
Wow.
So to say that insurance has gotten unaffordable for many folks would be a bit of an understatement. So what we're going to do today is we're going to unpack a little bit of the whys and what fors and see if we can come up with any ways possibly to even save some money. We did an episode like—
one good thing about it, it's cut my marketing budget down.
Yes, absolutely. Pull that thing up to your face there, by the way. So Brad is here. We've done an episode like this previously, but it's been about a year or so since we've gone through this, and they keep going up. So we want to kind of revisit why we've gotten to this point.
Different reasons now.
Yes, they're all different. So let's start with Brad. Brad's been in business for 25 years. Really good friend of mine. We've known each other for a long time. Kids play sport together. So we've been around the block. I refer, as a mortgage professional, I refer a good chunk, if not all of my business to Brad. And not because we're friends, but because I trust him and he can explain things about how all this insurance works better than anybody else that I've ever met. And especially for me personally, I hate insurance. It makes me want to fall asleep. So when I can call Brad and be like, what the hell's going on with this? He'll tell me the truth. And I know that he's doing that. And he does that for my clients too. So if you got anybody out there that is muddling through all this insurance BS and they need a little bit of clarity, Brad's not going to try to sell you. He's just going to explain it to you. So Brad, first off, give us a little background as to why all these double-digit rate increases have happened over the last couple of years, and what kind of is the impetus of it? Is it all insurance-based? Is it claim-based? Is it a little bit of both? Where are we at with all this?
Well, it's a lot. 25 years ago when I got in the business, an insurance premium for homeowners, it was like $500-800. It was a quarter of what we pay, or maybe even
it's like a 12th.
Yeah,
depending on the policy
what we pay now. It's pretty crazy, but we had great policies. We had low deductibles, and the premiums were stupid cheap. And so over that 25 years, obviously inflation happens.
Mm-hmm.
The last 4 years with COVID and all the changes that have impacted the industry. What we have a big issue with right now is just an availability issue, and people don't realize what availability means.
Okay.
That means the number of people out there willing to take the policies on. And you have to have enough companies that want the premium to have solid premiums. And when you have less people that want the premium, more, the bigger companies have to absorb more. And so they have to charge what they have to charge.
So it's just competition. I mean, what competition in the respect of if you're not competing with anybody,
that's 100%.
Right. But also too, if there is nobody to compete with, you kind of want to, because you don't want to bear all the brunt of taking 100%. A particular area. Right.
100%. So as a company, they don't want that. As an agent, I'll take what they give me. Right.
Right.
And so availability is probably the biggest issue. I mean, that happened in California. That's why what they're going through in California is just it's availability issue out there.
Right.
Nobody wanted to sell it. And at that point, you have to have a good legal relationship with the state, because everything's regulated by the state. And so if you don't have good regulatory atmosphere to play in, it makes it very difficult. And that's what happened in California, is just the regulatory system. Here in Texas, it's different. Our state regulators, they still try to regulate, but they also want to have an availability situation where people can still get insurance. And so when you have that double-edged sword where you don't have a place to go and the rates are going up, they get kicked like a football, right?
So on the California thing, I'm curious, we heard, the internet's full of conspiracies, but you hear about all this, these companies canceling the fire insurance, like 3 to 6 months before it ripped through the Palisades. How is that true, or it was?
Man, I don't know.
Do you know anything about that? I don't know if in the insurance circles y'all talk about.
I can't imagine that would be like Allstate or State Farm or one of the companies come to Texas saying we're not going to sell hell insurance anymore.
Right.
Well, how do you just peel that coverage out of the policy?
Yeah.
Right. You have to completely change the whole policy, start a new policy. I don't know what they do in California, but I don't think you could just come peel fire coverage out of a policy in Texas.
Right.
So if they lost their homeowner's insurance in Texas, there's only a few reasons you can lose your insurance, right? As long as you're willing to pay that premium, they can't just come take your insurance from you.
Okay.
Now, if you let your house get dilapidated, they can come inspect it and non-renew you. If you don't pay your premium, you can definitely get canceled. And then in Texas, if you have 3 non-weather related claims in a 3-year period, then they can non-renew you, but they can't just non-renew you for claims.
Gotcha.
Right. So 3 non-weather in a 3-year period in the state of Texas makes you non-renewable.
What would be a most claims these days are tied to roofs and things of that nature.
To me, it's typically you got hail, 65.
But that's a weather. What I would say, what was non-weather related?
Water, like a hot water heater, dishwasher.
Got it.
Those are probably the second most popular claim.
Okay.
But hell's what drives everything in Texas, just like the fires drive everything in California. Everybody's got their regional issues. And so Texas is just our weather has become very volatile.
Mm-hmm.
I'm not a conspiracy theorist about weather or anything, but when I got in this business, we had one hail season. It was probably February, March to June, July.
Mm-hmm.
And that was your hail season. Now we've got that hail season, and then we have the fall hail season when the weather's changing back.
Mm-hmm.
And then we have December, and we have tornadoes down in Houston in December. And so
we had a bunch of hail like night before last, didn't we? Have you got calls yet?
I have not.
Okay.
It's like we have hail somewhere every day.
We woke up in the middle of the night and it was just hammering on. I mean, we have a metal roof, so it
sounds louder.
Yeah, it sounds a little louder, but I mean, it was hitting pretty hard.
Really?
Yeah.
I had one out, I'm 10, 15 minutes from Mike's house, and I had one a few months ago where it was spattering the windows pretty good, and nothing that did any damage, but it's just the weather patterns where they're different. And so when you have volatile weather, you're going to have higher premiums because we cover weather. Explain
a little bit too how inflation impacts this, because I think when people say inflation, their eyes glaze over like, oh, everything's inflation, but explain
example
why that matters.
So this is a little different because we had COVID, but I tell this story probably every day in the office just so people can understand the explosion of the cost.
Right.
2018, I have a customer by Lake Arlington. They have about a 2,000 square foot, 2,200 square foot house. Hailstorm. We put a new roof on it. The insurance portion of that claim was $12,400.
Okay.
That's 2018. 2024, the customer passed away. His estate sold the property. They found new hail damage on the roof in the 6-year period that the new roof was on there. They would go to replace that roof, and the cost of that roof, if you want to guess, $34,500. 6 years.
Tripled.
Yeah.
Basically.
Yeah. It's tripled. So you're talking
labor.
We can't triple our prices every year.
Right.
The state won't allow that. Right. So we talk about the regulatory. We can go ask for rate increases, as you pointed out there at the very beginning. We have to continue to ask and ask because we can't get adequate enough.
Oh, that's right. Yeah. Because you guys are so regulated like us, you can only raise your premiums so much and you have to get permission from the state to do it.
We're a file for rate state, which means we can take our rate. We do have to file. And if they don't find that rate to be adequate or it's predatory of some sort, they can come back and penalize you and make you pay interest back and all that kind of stuff.
Okay.
So we can take the rate, but we do have to file for the rate.
Right. You have to prove that it was justified.
That's right.
Got it. And so
it's been pretty easy to justify these last few years with those costs.
Yeah. I mean, with the cost, I mean, just when you look at materials, you look at labor, wood, everything that goes along with that. I mean, I guess it's just added an extra layer. And then not to mention, like you said, all the weather events that have happened. I think I mentioned this last time. I read somewhere that we had it was, I think when they measured from like 2020 to 2021 to 2022, it was like a 3-year period. It maybe been prior to 2020. They went from, say 10, what they call significant weather events a year, which would be, in the way they defined it, was anything over, $1 billion or whatever. Exactly. And it went from 10 to like 20 the next year, and then to like 40, it was basically doubling every year. And it had to do with more weather events, but it also had to do with the cost because it was defined as $1 billion event.
I think a lot of it comes down to population as well.
Yeah.
I mean, last year, in the 25 years, I've never been in a market where they really just shut areas down that they're not writing new policies, or if they do, there's certain criteria. In the last year, the number of companies that just didn't want coverage in certain areas, the 4 counties up here in North Texas, Dallas, Denton, Collin, and Tarrant County, we have such a population growth. I think that's a big part of it as well. I mean,
it's more people
out here in Mansfield. 10 years ago, we had, it wasn't rooftops. It was cow pastures getting hit.
Right.
Now all those cow pastures have rooftops in them. And so when you have the explosion of the
population
growth, the population growth, and the number of rooftops, it's just every time it hails, something's getting hit.
Right. Something's getting paid out and hit because it's damaged.
Yeah. So it's just, it's a multitude of things. I mean, it's just the perfect storm. I mean, Texas is growing faster than any state out there. We can't keep up with inventory here. So they're just going to continue to keep building. So I don't see the problem going away.
Yeah.
I mean, unless the cost of roofing comes down, I just don't see that, the cost of construction period, but you say roofing because it's 65% of the claims, right?
Yeah.
That's 65% of what we do is going to be a rooftop. So when that's tripling in a 6-year period, what do you think your rates are going to do? We're not going to lose money as an insurance company.
So are you seeing more and more uninsured individuals? Especially, I know it doesn't happen on the home side of things because it can't. If you own a home, you can't. But on the auto side,
you can. If you own a home, if you have a mortgage, you can.
Correct. Yeah.
So most people have a mortgage, so it's very unlikely. But yes, it's your older generation. They call and they'll raise the deductible to 5. When they try to cancel the policy, our response to them is, look, raise your deductible to 5%.
Yeah.
Right? Have $1,000, $1,500 premium. That way, if your house burns to the ground, you get a tornado, it destroys your house, you have coverage, right? You're not paying this all out of pocket.
Right.
Some of them are, they're okay with that. Some of them are, I don't want it, I don't need it, and they cancel it. And so, they do go uninsured. I can guarantee I used to never see people go uninsured because it was affordable.
Right. But that's on homes.
On homes.
You're right.
Yeah.
What about cars?
Oh, I mean, it's just so much liability that you're taking on with a car. I mean,
well, of course, but I know
driving around every day.
No, I'm not saying, I'm not advocating for it. I'm saying, are you seeing that increase because it has gotten so expensive?
I don't know if I have the statistical numbers to prove that.
Yeah.
I would think that it's become more unaffordable for people to drive. So
sure.
I think affordability is a lot of the reason people go uninsured.
Right. Yeah.
So
but
I would assume, yes, we have more uninsured.
Like I guess what I'm asking is like when you because you obviously get auto claims, right? How often do you see them come across and say, I hit somebody and they're uninsured, or they hit me and they're uninsured, one of your customers or whatever? Has that increased?
Or that uninsured doesn't stick around and they just take off.
Yeah.
So it becomes uninsured.
Sure. Do you feel like that's increased, or do you feel like that's about the same as it's always been?
I think it's probably a little bit more than.
Okay. Yeah. But not dramatically, nothing that okay. No. Well, I mean, that's good to know at least. I mean, if it's, when you add in more population. I'm
not Fred Loya though. I mean,
right.
So, when you're not paying your bill, we're calling to remind you politely, hey,
yes,
we didn't get your premium payment.
Yeah. Yeah.
Those folks, they don't care if you cancel. Right?
No,
so
they don't care. So how much on the insurance side of things? I mean, we know the cost for, the repairs have gone up. We know the population's increased. We know, the weather events have increased, all this stuff. But I mean, just seeing what you see on the corporate side of things, you don't have to speak specifically about your company, but how much do you think insurance companies are trying to take advantage of this, or how much do you think they just can't because of the way the laws are?
So I think that they went a while, quarters of losses.
Okay.
Right? So when we went through the 2020 to 2024, with the cost exploding and everything, there were quarters that insurance companies had underwriting losses.
Right.
And I'm talking, you're talking 4, 5, 6, 7 quarters in a row where they're taking losses. They're just not going to continue to take those losses. So I think what happens is a kind of a snowball effect is we got to take more, we got to take more, we got to take more. And then have we taken too much? I don't know.
Yeah.
I don't know the answer to that, but I can tell you when I see these guys going and doing their quarterly reports, the profits these days are a lot better than they were 2-3 years ago.
Right.
And so there's always there's got to be a correction, hopefully, of some sort.
Mm-hmm.
I just don't know when it's coming and if it's coming.
Yeah.
I'd like to see it come.
Will you also explain, I mean, I know this obviously, but I want you to explain to anybody that hears this. I think people have a misconception that if they call you, Brad Bingham, to get an insurance policy, that they can, you can negotiate some rates for them. You know, try to work some. Hey, we're buddies, Brad.
Got a magic wand,
work it out for us. You know, and I know that you can. Obviously, we can adjust different coverages and whatnot. You can talk about that, but explain how it generally works. So when someone calls you and says, "Hey, Brad, my insurance, what can you do to help me out? What can you do to help me out here?" Well, explain that a little bit.
These days it's very difficult,
right?
I mean, the systems they're made kind of dummy proof now, where it used to be a little bit more difficult. I could pull a manual out and I could give you a rate out of a manual.
Right.
Now they want everybody to be able to do it online or on the phone. So they try to make it easy. Right. And so there's not a whole lot of variables these days that change premiums. It's really just your coverages. Right. And so obviously insurance is risk. The more risk you take, the less you pay. The more risk you want them to take, the more you're going to pay. So there's the give and take there. And so what most people are doing right now is just they're raising deductibles. And it hurts me because I went from, $250 to $500 deductibles back in the day when I started to a 2% deductible on your roof, or some are doing 3% deductibles on roofs. And, that's great when you reduce your price by $800 to $1,000 a year. But when you got to pay $6,000 more out of your pocket next spring, there's a risk reward there.
And this is another simple question, or another simple answer, I should say. But I want to make sure that, again, people understand this. Explain how a deductible works, because it's still like, look, I talk finance and mortgages all the time, and people don't understand. I literally talk to people every day that don't know how much money they make. Like, that blows my mind. I will ask them, how do you get paid? What's your salary? How do you make hourly? Like, oh, I don't know. I'm like, you give me a ballpark. You don't have to be exact, but just an idea. I have no idea. I have to look. I'm like, you don't have an idea of how much money you make. So
they know if they need a cheeseburger, the money's there.
Boy. But so my expectation would be that the deductible concept, because I'll admit, up until probably about 5 or 10 years ago, because I didn't give a damn about insurance as far as paying attention to it, I didn't really know what it exactly. I knew what it was, but I didn't know how it was determined and all that. So
it's pretty simple. It's your stop loss. I mean, where do you want to stop paying? Right. So if you're okay with the first $5,000 out of pocket for a loss, that's your deductible, is $5,000. The carriers kind of determine what they allow you to choose as your deductible. You can't just say, I want an $851 deductible.
Right.
But
it's a percentage, or they have certain.
Yeah. So with my carrier, you have a flat deductible, $2,000, $2,500, $3,000, $5,000, $7,500, $10,000.
Right.
Most carriers don't give options like that. They just say you can get a 1%, 2%, 3%, 5%, whatever. And
that's the percent, 1% of the
dwelling value. So whatever you're covered for, not your market value, your replacement value. You have a $500,000 house, 1% deductible is $5,000.
Right.
2% is $10,000.
Right.
And so back in the old days, just like the example I had earlier, $10,000, that almost paid for the guy's roof. Now that's our deductible, right? Because our roof is $35,000. And so, it's kind of all relative, but, people say I can afford this now, but when it comes time and you have that loss and your car just broke down, and, I explain people's deductibles to them because it's very important. Right.
Well, that's the part that you're paying out of pocket.
That's what you're paying out of pocket.
Yeah.
And so, back in the old days, people, they'll just eat my deductible. Well, there's laws against that now. Right. And so it's always been against the law. It's just,
what enforced?
Anybody forcing it. Yeah. Right. And so, you got the people that want to do things, but look, they're charging it somewhere, right? I mean, they're not making less money.
Yeah.
So, are they overcharging the insurance companies? Probably. Yeah. I mean, just, get off the roofs for a little bit and talk about a water claim. Back in the old days, I'd have them, hey, get some restoration people out here. Let's see how much damage you have, because you have this deductible. And if it's not at your deductible,
then why would you
file it? Right. Yeah. And so now these water restoration companies come out there. Well, it always starts with a plumber, right? So the plumber comes out, fixes the problem, and then he's got his buddy that does restoration, and he brings his guy out there, and they've got, we'll dry you out. We got our van out. It's already out front. We can do this right now. And so they get in the deal, and they're giving a kickback to the plumber, right? And so they're going to charge somebody for that kickback. And so a water claim they would be under deductibles, and we wouldn't file a claim. Right. Now a normal water claim's $15,000, $20,000. And so it's the cost of all these claims have just got stupid. And a lot of it, there's some greed in the system, and I do a lot of these days when I'm at the office, I'm fighting claims, and it's not fighting because they're not covered. It's fighting with a contractor that says they want to do this, and this is how much it's going to cost. And Allstate says, well, we can get it done for this. And there's a common ground. You always got to get to it, but they're always asking for the mountain, right? I want $50,000 for this $20,000 job. Well, don't we all?
Yes.
Right.
Right.
But who's paying that premium?
Yes.
We are.
Right.
And so there's a lot of that in the system too.
Yeah.
And it's the adjuster's job. Everybody looks at an adjuster as, man, these guys just don't want to pay me. And they're like, well, it's their job to make sure that you pay a fair premium for your policy as well. And so we're not going to just pay for things that aren't covered by the policy.
Right.
Right. So they have a really tough job. I mean, it's probably the toughest job. I tell them all the time. In an insurance company, the adjuster is the face of the company.
Everybody hates them.
They hate them.
Yeah.
Right?
The insurance company.
They hate me too. Right. I mean, when you turned me on this morning, I'm surprised they weren't throwing eggs. I can't see eggs being thrown at the screen, but there probably was.
Yeah.
But I get it. I mean, I pay my premium, and when I pay it, I cringe too. So
yeah, it's not like you get a break there
I
too.
get a little 5% discount.
Yeah. Woo. All right. You said something about claims a second ago that you kind of blushed through, but I want you to elaborate on a little bit too, because I think the general public assumption about insurance agents in general is like, well, when I call you and you tell me probably try not to make a claim, well, of course you don't want to make a claim. You don't want to have to pay out. Why would you do it? Right.
But we don't want to pay $30,000 out of our pocket for nothing either.
Exactly. So can you explain a little bit about the mentality behind, not only you're not trying to talk them out of making a claim, you're just trying to help them understand the math equation of how much is it going to cost you to do it on your own versus what is it going to impact on your premium by having this claim, and how much is that going to change?
So we go through that all the time when they call and they say they've got a situation. I'll counsel. I counsel all the time. Which
by the way, I want to before we start that. This is a part where I want to explain why when as a mortgage professional, I have people call me and they want to use Geico or Progressive, which whatever, I don't, no knock against them. I'm saying this isn't Brad. I typically tell them when it comes to your house, I know everything's bundled now, so it's hard to do them separately, but when it comes to your house, especially, you do not want the 1-800 number, because if you've got the 1-800 number, you're going to be in phone tree hell.
They're on your side
for 2 days, and they're going to beat you up and push you to this person until you kind of just give up. I really truly believe the business model in those circumstances is to filter you through as many channels as we can. And if you're going to hang on, eventually you're just going to get pissed off and go away. So the idea that, that you need somebody when it's time to make a claim. When my wife backs her car, her new Tesla, into a rock in a parking lot, at a restaurant, I need her to be able to pick up the phone and call somebody and say, okay, what do I do?
I have a real good one for you.
Yes. So my whole point of all this is to say, when you're picking insurance providers, at bare minimum, I'm not saying you got to use Brad. I highly recommend it, but at bare minimum, use somebody that's an agent model that you can pick up the phone and call them and ask them what to do, that they can walk you through it, because there's so many pitfalls.
They'll take the time to do it.
Yes. Yeah.
Most of them just want to sell you a policy these days.
Sorry, I didn't want to into that, but okay. So go into someone calls you and they say, okay, this is what happened.
So they call and say they have the hot water discharge on the floor. Right. And I've got carpet or I've got wood, or depending upon what they've got, it depends on how much the claim's going to be. Right. So first thing you got to do is get it professionally dried out. They get it dried out. You want a good reputable company that's not going to come rip your head off and say, oh, how big of an insurance claim can we make this? Right. Because there's times I'll get on the phone with their contractor and say, look, either treat this like your grandma, or we'll call the next person. Right. You don't have to do this job.
Yeah.
There's other people out there.
Yeah.
Right.
Yeah. I can work with you, or I can work
in the
against
kitchen.
you.
Doesn't mean you got the job.
Yeah. They know me. They don't know you.
That's
and
right.
I can work against you, or I can work with you.
I'll be the jerk.
Yeah.
And so, I'll explain to them, let's keep the cost down. Let's help the customer out. Let's do the right thing for the customer.
Yeah.
Which should be the center of everybody's idea of
yep.
what's right for the customer, not what's right for my pocketbook.
Right.
And so if we have situations where we can get that dried out and we can replace that carpet and it's not over your deductible, then there's really no need to file a claim, or even it may be over your deductible by a couple $1,000s.
Right.
But you're looking at $5,000 out of pocket, or you're looking at your insurance going up $700 for the next 5 years.
Yes.
Right.
Yep.
So there's a fine balance there of what's the real reward here.
Right.
And if you don't know that, you may be filing claims that aren't benefiting you.
Right.
And so as an agent, if you have a good agent, it's their job to explain, hey, look, here's what your policy does. This is how it works. This is a type of claim that doesn't affect you. So file it. It's okay.
Yeah.
Or this is a claim that this one's going to hurt you, and this is the benefit of it. This is the the cons of doing a claim, and you got to figure out what's best for you.
Right. You said you had a story about cars backing in the parking lot.
No, I have a story about. So I have some really good clients of mine. They're always a joy to talk to. They're probably 50, 51, mid 50s, something like that.
Right.
So they teach their children at a very young age that they need a Brad. Right. So
okay,
you need a Brad because when you need him, you got to claim this. You got to call Brad.
Yes,
right.
Yes.
And so the other day they've had a claim that's been going on for a while. They had a storm, chimney pulled off the house, and so it fell into the pool. And so they've been having a pretty nasty time with their claim. And their daughter looked at her the day, and she was having some issues. And she goes, "Mom, why wouldn't you just call Brad?" And so I love it when a 20-something-year-old is telling 50-year-old mom,
"Yeah, what are you doing?
Call Brad."
Yeah,
right?
What are you doing? What are you doing?
That's so they trained him right.
Yes.
They taught him right.
They taught him the right way. That's good. Yeah.
The younger generation doesn't believe in that, right?
Yeah.
They just like, how quick can I get this and get it off my bed?
They want to Google it and see what they can find out there. That's right. Yeah, I mean, look, there's a lot to be said for knowing and having somebody on your side that can help you navigate through things and figure out what's going on, because the insurance process and the claims process is a nightmare if you haven't been through it before. And don't recommend it on to anybody. Sometimes
claims
it can be easy.
Fun.
Sometimes it can be okay, but for the most part, it's kind of a huge pain in the ass. So at least having someone that can say, okay, try to do this, make sure you say that, whatever, just walking you through how to file it if you need to, if you actually need to file, maybe you don't need to.
Or you got a contractor telling you something and those are red flags. I'm like, hey, it's time to find a new one.
Yeah.
Right.
Yeah.
This is not the person you want in your house.
Yeah. And that's difficult too, because unless you regularly have issues on your property, then you don't know very many people that are contractors. And if you're going, unless you're going to Mansfield Moms Talk, or you're going to, somewhere,
they got all the good ones out there.
Yeah. Somewhere on Facebook or whatever. Then, you don't know who to call. And then these guys come in, and there are really good ones, and there are some really bad ones. And I mean, I can speak from personal experience. I've had, because this house is just old and has stuff go wrong all the time. And this damn gate in the front is constantly a pain in the butt. And I've had multiple people come out and look at it, and I would say
want to be a renter, Mike?
80%. Yeah. I would say 80% of them are wrong. Well, if I had been a renter, I wouldn't have the equity that I have right now. So
that's true.
I practice what I preach.
Cons.
Yes. I practice what I preach on that for sure. Right. But having someone that you can trust that's going to tell you the truth and not try to take you over the coals. And man, I can't even tell you how many people that I've spoken to that speak with a ton of confidence, like, oh, well, this is what you need to do, and blah, 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 blah. And then they totally mess it up, or they don't show up back because they realize they were wrong. And then somebody else comes out and you're like, well, the last guy said this, and like, that guy's a moron. This is what
over-promisers and under-deliverers, Mike.
It's crazy. And so, like I said, just having a person that can help you navigate that stuff when it comes to the claims is so important, because you can't replace the knowledge and the wisdom that they have. And it's the old adage, like when you hire a plumber, you don't pay the plumber $500 for his 30 minutes of work that it took to fix the thing that you didn't know how to do. You're paying him for his 20 years of experience, knowing exactly how to fix that thing when he came to the door. And fix it right so it doesn't break again most of the time. So
unless you know another plumber that'll do it for 300.
Yes. You told me a little bit about, we were talking before we started about, like I said, we know inflation's had a big issue. We know weather events have had a big issue, population, concentrated areas, lack of competition. All these things have kind of driven prices up. A little bit of insurance companies trying to recoup losses that they took in the beginning as well. But fraud these days, or if you want to be nice and not be technical about and call it direct fraud, but for the most part, fraud. These days everybody's incredibly litigious. Yes. Litigious. So talk a little bit about how that works.
That's the auto.
On the auto side. Yeah.
So the last 4 years, starting in COVID, it was all about parts and log jams and can't get your car in the shop. We're sitting in rental cars for 2 months, whatever. Right. Now what's really kind of pushing the rates for auto is bodily injury claims. Okay. And it's all driven by attorneys. Mm-hmm. Attorney represented claims are through the roof. The payout on attorney claims are higher than non-represented attorney claims. And you're sitting there saying, oh, so you're saying I can make more money? Well, the attorney's making money too. Right. So what I tell people all the time, like, do I need an attorney? And I'm like, is the insurance company not treated you right? And they're like, well, I haven't even talked to them yet. Then why do you need an attorney? Right. Right. You need an attorney when somebody doesn't do you right. Right. And if you give them the opportunity to do you right, then maybe you're in a position that you get treated right. Right. and you didn't have to go through a fight for 2 years, because when the attorney gets involved, it's a fight for 2 years. Right. As long as you're willing to settle it, wait out and not settle, they'll just keep dragging it out.
Yeah. Yeah.
And so on the bodily injury side of things, it's disgusting.
Yeah.
It's absolutely disgusting. And it's, you get the attorney up front, then they're going to find you a doctor to see you, whether the doctor's a good doctor or not.
Yeah, it's like its own little ecosystem.
It is.
Because those attorneys know the doctors that are going to do what they need to do and collect as much as they need to make sure that you get the amount that they want to get.
That's right. Yeah. And when they get that amount, then they'll turn around and negotiate a figure with that doctor.
Right.
Because they're not getting the $30,000 bill they provided you. They're getting probably 15 of that.
Right.
Right. And so it's just a
circle.
Paid. It's a circle game, and we're paying the premiums.
Right. Yeah. It sounds good if you're the one. I mean, it's unethical, but if you're the one making the money, they're like, oh, I'll make my money. But everybody else is paying for you making your money, because all the premiums get spread out amongst everybody else, because you're suing the insurance company. And there's a reason that the Texas Hammer can afford to pay for commercials,
for the Super Bowl
during
the Super
or
Bowl.
like,
I think that one guy's getting on his jet during the Super Bowl.
Yeah. What's the guy's name? We have a turkey here that she calls it the law turkey. I can't remember the guy's name. There's another one that's on TV all the time, but those guys,
they're on everything, man.
Yeah, they're on everything. And you don't pay for commercials like that unless it's a lucrative business that you're making a lot of money.
I've always told commercials are the most expensive line of advertising.
Yeah,
but they spend a lot on them.
Yeah. Well, and you think, and I think it's a good point, because when you were talking about, is the insurance company doing wrong? And I'm not here shilling for insurance companies. I don't feel sorry for billion dollar companies, but at the same time, everything is affect on a lower level. And when you're dealing with a human being on the other side, and you're saying, hey, look, I'm trying to help you and trying to work through this with you, and I'm going to help you, and it's going to make sense. But if you go get an attorney, now this is an adversarial relationship, and now we're not on the same page, and I'm not going to help you. And then you're going to have to figure that out on your own and hope that attorney that you saw on TV is doing you right. Because if you think that he's looking out for your best interests, you're crazy. He's looking out for money. He's trying to get paid. And that's, this ties back to the recent stuff with NAR, the National Association of Realtors, and the commission settlements that they made with all of these plaintiffs in this Sitzer Burnett case. Okay. Because, and I'm going to mess the number up, but let's say they paid out $380 million or $1 billion, or whatever it was, millions, I think. The attorneys got 85% of that money.
Oh yeah.
Because of the billing hours that they put into it. I read somewhere that like the average plaintiff that actually was a part of that class action suit got something like $30 or something ridiculous. Like it was well below, maybe a couple hundred, but whatever it was not worth all.
Kind of like divorce,
right?
Like the attorneys are the ones that make out on those.
Yes. And so, when you look at that and you go, okay, the attorneys are the ones making the way, and they're making the most of the money on the settlement. So who is the attorney looking out for? Are they looking out for you, or are they looking out for their pocketbook? And I think we all know the answer to that.
How deep they can get.
Yeah. Yeah. It's unfortunate that
they're not coming to your Christmas party next year.
No, no, they're certainly not. No, they're certainly not. All right. So things are expensive. We know this is what it is. And, all you can do is kind of learn the rules of the game and try to navigate those a little better. So I want you to explain now kind of about how, if I call X insurance company, okay, and same exact search of circumstance, me, the house, everything else, my premium is $200 a month. Okay. Then I call Y insurance company and my premium's $350 a month in the same area, same thing. What is likely to have occurred in that scenario, knowing nothing else about it?
Man, some of these rate increases I have seen have been stupid.
Right.
Right. And because they can't non-renew you, the only thing I can think they're doing is running the business off.
Right.
Right. And so you have different sizes of companies, different availability of risk. And so one company may have more availability, right? For every dollar we bring in, we got to put money up in reserves to be able to sell that premium.
Yeah.
Right. And so if you've got somebody with deeper pockets, they've got more leverage than somebody with less pockets. Right. So they all face the same risks.
Right.
They all face the same costs. You would think premiums would be relatively the same. But it just comes down to a company that wants to be in the business in that area or not. And so sometimes you just got companies that don't want to be there, and they'll sell a price that you don't want to buy at.
Well, that's certainly part of it. But where I was kind of going with that question was more about how they change coverages on you without you realizing.
I got you. Okay.
Yeah.
I wasn't picking up what you were putting down there, right?
Yeah.
So you're comparing your current policy to a new policy,
correct?
Right?
Or just two new policies together, and you're just looking as a consumer, you're just looking at that bottom number, and you're going, "Oh, I like this bottom number better than I like this bottom number."
And so their proposal may hide deductibles or different coverages, and so I always tell my staff and myself when I'm selling a policy, I sell policies how I would buy them, not for the price of them.
Right.
And so I start out with a quote of what I want. Right. And so I'm going to put the sewer backup coverage on there. I'm going to put the coverages that I want on a policy. And then I explain them to the customer and say, these are what these coverages do. These is how much they cost. It's your choice whether you want them. I would purchase the policy with them, but if you want to cut that out, you can.
Right.
A lot of agents start the opposite way. They start with everything out of it,
right,
with the cheapest price, to see if they can get the policy,
right.
And then if they see your comfort level is, oh, okay, I like this, I like that, and they may try to upsell them,
right.
Everybody has their way of selling things,
sure,
right? I'm very transparent. I sleep very well at night just because when I talk to somebody, they know what they're getting, right. And it's just crazy to me, and the roofer, sometimes these people had no idea what their deductible was.
That's the biggest one. A lot of times they don't even realize.
The roofer comes like, hey, did he know he had a $12,000 deductible? And I'm like, well, that's why his price was $2,000 cheaper.
Yeah.
Right. And so everything's not the same. They're not going to tell you it's the same.
Right.
Right. They're just going to say, here's my quote.
Right.
Right. And most of them don't have a 1% deductible option. And so when you don't have that 1%,
did those just go away?
Almost, man. It's
really?
I mean, like,
was it just because so few people wanted them simply because of the cost, or was it just like they just don't want to be responsible for all of it?
It's just the insurance company pushing off the risk to the customer.
Because that used to be pretty standard, right?
Well, I mean, when I got on the business, it was $500 to $1,000.
Right.
That was
just
a roof
flat.
Yes. Yeah. $500,000 roof deductible.
Right.
Then it went to 1%.
Yeah.
And 1%'s pretty much been the standard for, I'd say, 20 years.
Yeah. Yeah.
I mean, at least.
And now it's just basically gone.
And now, I mean, we still have one. There's a few companies that still have a 1% deductible, but I will tell you, most carriers are at 2% on your roof. Wow. You can still get 1% or $1,000 on everything else, but for your roof, they want a 2% deductible. I mean, I've seen carriers go to 3%.
Yeah. And
it's just like, we don't want to cover the roof
and not even tell people, really. Mm-hmm. That's the part that gets me is, and I see this every day because, we're always, look, in the world of mortgages, I'm trying to get your payment manageable so you can pay it. And I'm also trying to get you to qualify. And sometimes those insurance, I've had to up my estimations on what I think insurance is over the years. And it still comes in and blows me away sometimes. Yeah. And, I'm putting it at $300 and they're like, well, this is a $400 a month. I'm like, geez. So, or they will come back and say, oh, I got this one for $175. I'm like,
whoa, what's going on there?
Something's not right about that. Like, you need to check.
Sure that's an insurance policy?
Yeah. I'm like, you need to call somebody on this one. This doesn't seem right. But it's crazy to me because, again, and that's why I asked you, is like, people look at that bottom line number. They just look and see, here's how much I'm paying every year. I want the cheaper number over the bigger one. But then they don't realize until you get your roof replaced, which, by the way, if you live in Texas, okay, your roof is going to be replaced at some point. What's the average right now? Do you know?
I don't know. I'd say around here probably 6-7 years.
6 or 7 years.
Texas. Yeah.
So you're going to have a deductible on that roof. So if you don't know what your deductible is, and that roofer shows up and gives you the bid, and you're ready to go, and you call your insurance company, and they're like, "Yeah, you're going to pay $15,000 out of pocket on this," and you had no idea because you had a 3 or 20,000 if you had a 3% deductible on something. I mean, that is a wake up call. I mean, how many calls do you get from people that? Have you ever get calls from people that left and then call you back and like,
oh, sure.
Okay, like, oh, crap, Brad, I just got my roof claim and I didn't even realize. Okay, explain this all to me.
Yeah. So a couple of things about the coverage. A lot of people don't even realize what, they cannot be comparing apples to apples, but the deductible is the same.
Right.
Right. Because most companies in the old days, replacement cost was pretty much the standard.
Right.
Right. With the roof situation where it is, replacement cost is becoming, I would say, I'm not going to say obsolete because it's definitely not obsolete, but you've got insurance companies that are slipping in their policies some type of a payment schedule, depreciation, whatever you want to call it. It's all depreciation, right? So as your roof gets older, the value of your roof goes down, which it doesn't. It still costs the same to replace it, but the amount of coverage that they're going to give you goes down, right? And so some companies will start out at year one where they don't even do replacement costs. There's some companies that at the 5th year, the 7th year, the 10th year, 15th year. So not all policies are the same, and the deductible may be the same, but if you take a depreciated value policy that the roof's 10 years old and they depreciate at 3% a year, they're going to cut 30% of your value of your roof off just because it's not replacement cost.
Right.
And so if you buy a non-replacement cost policy, they can sell us a lot cheaper because that's where they're saving money on their roof claims.
Right.
And so not only deductibles, but the coverage is the same. Or it may not be the same.
Right.
But when you're shopping around and people just start stripping things out, they leave it up to you to lay it side by side and say, this is what I got and this is what I'm getting. They're not going to tell you anymore. Right. Hey, this is where we're better. This I just got a cheaper price.
Right.
Right. And right now people just want cheaper.
Yeah.
Because it's stupid.
Because everything's expensive.
It's so stupid.
Yeah. Because I see memes all over the internet about how being rich means having a dozen eggs in your house. I mean, it's and inflation, oh, by the way, is creeping back up again.
I'm telling you.
It's getting more and more expensive. I mean, and look, I will never hate on anybody for wanting, to just saying, hey, look, if something happens, it happens, and I'll figure it out when it does. But I just got to keep things cheap as long as I can, as much as I can.
I get it.
But I get it. I absolutely do. Take the 5% deductible, or take, the less cost. I'm not going to hate on anybody for needing to do that for themselves. The key is just know what you're doing.
Absolutely.
Like, just know.
Educated.
If you're making that decision, that's fine. Make that decision, but know why you're making that decision, not just because you thought that God smiled upon you and gave you cheap insurance. And I was like, no, you're nothing is free, right? You pay for everything one way or another. If it's, it's the old, say it all the time in my business, if it sounds too good to be true, it usually is. So you need to be conscious of that. If something surprises you to the positive, as cynical as this sounds, it's probably not reality. You need to dig a little deeper.
It's like in your business, Mike, when, I'm doing a quote for somebody and they're shopping their mortgage, right? And they're like, oh, this guy's telling me my payment's going to be this, and this guy's telling me my payment. Well, I was like, what is he telling you your insurance is?
Yeah.
Because if he can get it for $50 a month, like he's telling you, he probably can't.
Yeah. Well, and that's true. And that's what, unfortunately, that's always been a nemesis of ours over the years, with like the Zillows of the world, and not them directly, but the way they build out their payment quotes. Because when someone goes and sees a house online,
estimates,
it'll give them an estimate of their payment. The estimate's like the value of the house, but it'll give the estimate of the payment, and it's always low. And they may have the taxes, but the problem with the taxes is the taxes that they're pulling are usually input by the agent. And if the agent's not paying attention to if it's got an over 65 exemption, which for whatever reason they never do, or anything else would artificially bring that payment down, or the fact that the person's lived there for 15 years and their taxable value on that $400,000 house is only 200, because they've been capped. And as soon as you buy that sucker, your taxes are doubling.
Going up.
Yeah. So, and then they do the same thing on the insurance. They put a $50 policy in there, or something stupid cheap, $125. And so I'll go through this whole exercise with somebody about their payment, explaining all the things they can impact and the things that they can't. And then I'm like, okay, so all these things being equal, this is what your payment would be on a house about this price. And they're like, oh, that's not what Zillow said. Zillow said it's, why are you so far off? Well, Zillow is lying to you.
They sell 1% interest rates, don't
they?
Yeah,
that too. Yeah. But I mean, it happens in the entire thing. And it always comes down to, unfortunately, people just not knowing, and it's not their fault. Like I said, insurance bores the hell out of me. The only reason I know anything about it is because I know you and because I do mortgages. But if you want to talk about like what could be going wrong in my truck, in the engine, I got no clue, man. I'm purely relying on what somebody else is telling me, and if I trust them and what they're saying. And so I don't have a negative thought on someone who doesn't understand this stuff. But when you're in the situation and you're going through it, that's the time that you need to at least learn it at that time, because otherwise you're going to make decisions from an uninformed position.
You're going to buy again
and obviously get taken advantage of.
Yeah.
So it's unfortunate, but that's just, it's what it is. So what
predators everywhere, Mike?
What if anything, and I know there's limits on things, but what if anything can people do to try to keep their premiums as low? Is there certain, things that they can do as far as the way they drive, or keeping them log on? I mean, I know they have all these little bells and whistles these days that you can do, but obviously the normal, the fewer claims you make, you're going to save money. The fewer accidents you get into, you're going to save money. But what else other than taking those big deductibles? What else?
The first thing is just reach out to your agent, right? And if you have a 1%, or I have people that still have $500 deductibles, right? You can't pry it away from them.
Right.
They know the value of a deductible, and they'll pay for it.
Yeah.
But just realize when you do go shopping, if you're at a 1% deductible and you're getting a 2%, it's different.
Yeah.
Call your agent, get a quote at 2%. It may be cheaper for you to stay where you're at and just modify your policy.
Right.
Right. But everybody always calls and says, I don't want to change anything. I just want you to make it cheaper.
Yeah.
And I'm like, well, so do I.
Yeah.
Right?
Me too. I would love to.
And unfortunately, right now, there's not a whole lot on the homeowner side of anything you can do, right? Other than shopping, because there are some companies right now that are just not competitive, and you don't know that, right? I mean, when your price goes from 4,000 to 9,000, your red flag should go off.
Yeah.
Right.
Yeah.
I literally had one of the day that was paying 62 and her renewal was $15,000. Right. We rewrote her for 62. She changed her deductible a little bit, but I mean, you just have to be a smart consumer. You can't just sit there and take it. Right. Yeah. So pick up the phone, deal with somebody that you trust, right. And that you feel like they're doing you right. And on the auto side, I mean, everybody could be a better driver. Right. But the problem is with the roads that we drive on around here, I mean, you got construction everywhere and you got road debris everywhere. And I mean, the claims they're stupid. Once again, used to I'd call, people call me and say, hey, this is what happened. What should I do? Right. And used to I could say, okay, go to this shop and, they'll do this and it's less than filing it for a claim and you'll come out better over a 3-year period. Right. It's hard to do that now these days. Yeah. I mean, a small little claim is a $3,500 claim now. I mean, I used to be able to get claims that were less than $1,000 that people could fix stuff for. Right. You can't do it anymore for that. It just, with labor and everything, the cost for parts, it's just very difficult. So always be a better driver. Most of the companies have the trackers now where they want to track your driving. And if you'll let them track your driving, I don't want anybody tracking my driving.
Could work against you too, though, right?
It can work.
Yeah. Be careful. Yeah. You better be a damn good driver.
That's right.
Well, having I had, when we bought our Tesla, there's insurance that comes with it. Or not comes with it, but you have an option to buy. And of course it knows everything that you're doing all the time. And
I read all about it.
And it will, like, in the car, it'll like basically yell at you if you're not changing lanes the right way.
Pop up Brad's face like, you better slow down.
It's like, it's like having my wife in the car with me all the time,
Susan's not watching.
Yeah, no, she doesn't watch this. But it's constantly barking at you for your driving. If you're like, when I pull into my driveway, like when I'm coming through my driveway, because I have a car parked, and like I pull in quickly.
Close to it.
Quickly. Yeah. And I pull in, and like every time it's like, oh, there's a car, like slow down. And so, like, I noticed when I first got the Tesla insurance, it was cheaper, and then it kept going up and up and up and up. And it was like, you look at your driver rating, I'm like, why is it rating me such a terrible driver? Well, it's because it reads everything that I'm doing all the time. So I was like, all right, well, I'm getting rid of that. Like,
what you may think is safe, they may not think is safe.
Correct. Yes.
So it's so those trackers are becoming the way of insurance. Right. It's telematics is everything.
You may not be able to get away from it at some point, huh?
I've got an older truck. I don't really ever plan on getting it because it doesn't have all the telematics in it.
Well, I'm just saying, in order to even have coverage,
100%.
The insurance companies might be like, we're not going to give you coverage unless.
They'll still be able to underwrite. But I will tell you, on the front end, you opting in is a 10% difference. Yeah. So just on your auto insurance.
Oh, just right off the top.
Just opting in is 10% cheaper.
Wow.
Right now. They're going to rate you based on your driving.
Right.
The old way, it was discounts. Right. Now it is actually performance based.
Right.
So if you're
real time data,
it's not real time. It's every 6 months. But
I mean, they're tracking.
The data's live. Yes.
Yeah.
So as they're tracking your driving habits, they're creating a rate for you individually, and that's really what most people don't realize is in the old days, everybody was a 1A driver or a 1B driver, and the pools were so big of people. Right. Now all they're really trying to do is individualize your premium to you, right? So if you're a less risky driver, then they think you should pay less risky premiums than if you're a more risky driver. And so really all the telematics and all the dissecting an insurance policy to a premium is really just try to individualize that policy premium, right? Which some people like and some people don't, right? And so miles driven a year is a big deal now, where it used to be either to and from work, right? Well, they don't even ask you to and from work anymore. They just want to know how many miles a year you drive, right? They can figure out if you drive to and from work or your girlfriend's or what you're doing. Right. They can figure all that out. But that, the rating factors have changed over the years from what it used to be. And it's funny that it took COVID for the insurance companies to realize miles driven was a big deal. Yeah. Right. Because during COVID, nobody had an accident because nobody went anywhere. Right. So the miles driven went,
yeah,
and the claims went, and they're like,
Yeah.
wait a minute, people don't drive, you don't have claims. And so they went to miles driven was a big rating factor.
Yeah, that makes
And
sense.
so
It's amazing it took them that long to figure that out.
It's funny that a pandemic, it takes a pandemic for an underwriter to figure that out, right?
That's crazy. I got another hot tip for you if you want to keep your insurance down. Don't have teenagers. That is
don't have kids, period.
Yes, that will save you so much money. Brad knows this because he's doing my insurance for this, but I have 2 kids. I have a daughter who's 17 and I have a son who's 15 who's soon to be driving soon. Brad as well. Kids are the same age. And when I got our insurance change premium update from adding my daughter to it last year,
without Katie?
Yeah, I just about fell out of my chair because it was almost double what I was paying before. And girls, from what I understand, are cheaper to insure than boys. Not really? Okay. All right. Thank goodness. All right. So that's
one of those old 1A, 1B kind of deals.
All right. Good. At least they're classifying.
These girls have cell phones too.
Yeah, it's a good point. Yes. Well, yeah, the girl that plowed into my mailbox out front, she was looking at her cell phone. And your story earlier about your friend who's looking at the daughter looking at her cell phone. So yeah, that's a hot tip if you want to keep your insurance premiums down. Don't have teenagers because they have
cell phones.
Yes, and don't let them drive with their cell phone.
Tell me how that works.
That's got to be a thing that is such a impactful piece for not just kids but adults too. Like I drive down the road every single day, obviously, and I watch people in front of me and they're moving a little bit. And used to you'd be like, man, that person needs had a few drinks. But now it's 2:00 in the afternoon. Now they could have had a few drinks, but 99% of the time when I pass by them pissed off because I drive a spaceship, when I go by them, I'm looking at them and they're just staring at their phone. And they're not even I'm not going to say that I don't do it because I do. I don't do it as much, but I do it. Right. But at least I keep my phone kind of down here. So I'm not necessarily looking. They don't know that I'm looking.
People don't see you doing it.
Yeah. But these people got it on their steering wheel and they're just staring at it's a screen in front of them. And I'm just like, oh my God. And I just watched them for the past 10 miles, barely weave in and out between different lanes. It's real. It's unbelievable.
So the attorneys, when the attorney gets involved, the 2 things they look at is, alcohol.
Yeah.
1, cell phone 2. And they go back and look at your records. Were you texting? What were you doing at the time of the accident? And they can pinpoint it. Really? And so driving distracted with a cell phone is almost as bad as driving under the influence.
I think it's worse.
Well, there's no penalty to it legally.
Yeah.
Right. But as far as the amount of claims that it causes, the damage it causes,
it's got to be way more.
The life lost from it.
Yeah.
It's legit.
Yeah. Because people don't think, everybody knows these days that drinking is bad. Drinking and driving is bad. We all know this. There's still plenty of people do it, but we all know it's bad. But people I think they know looking at their cell phone is bad, but they just don't see it that way because I'm just going to check for 2 seconds or someone just texted me or whatever the case may be. And, I wish there was a device, where you could train
it off.
Yeah. You could once my child gets into the car, their cell phone is basically.
You would think an insurance app would do that, right? I'm going to track your driving, but you're not going to use this phone while I'm on here.
Yes. Yeah. You can't. You can use your nav.
Yeah.
And maybe your music, right? And then other than that, nothing else is working. Yeah. But that's not
a violation of your privacy, Mike.
Yes, I know. And there is it's a delicate line or whatever, but it's still. I think that would save. I could just only imagine the increase in premiums that have occurred just from the cell phone usage. I would bet you it makes up 10%.
Oh, more than that, I bet.
Yeah, I'm being nice,
I'll
on
bet
that.
you more than that.
Just if you don't want your insurance premiums high, stay off your damn phone. But nobody wants to do that. Before we go, we got about 5 minutes here. Let's talk a little politics. So the big red machine is in there wrecking stuff with his good buddy from South Africa,
slinging the hammer.
Yeah, and everybody's pissed. Which I me. I first time around Trump was there. I did not vote for Trump. I don't particularly like him as a human being. But sitting there watching 4 years of what just occurred with the president who basically wasn't there and has such, there's been plenty of stories since that have basically proven that. And then Trump deciding he's going to bring in RFK and Tulsi Gabbard, who both got confirmed, which, ooh, yay. And then along with Elon too. Look, say what you want about Elon. He went into X or Twitter and bought that company. He overpaid for it. He cut 80% of the staff. He lost $1 billion the first year of owning that company. And since then, it's turned it into the most profitable with the least amount of people employed,
Really?
Social media side. And oh, by the way,
some of our insurance companies need to do the same thing.
Traffic on his site is competing with Google now, or competing with YouTube. So, so there's a lot of positive things. There's some negative stuff.
X site?
Yes, on his X site. So, I think,
say what you want. The man's smart.
Yes. Well, when we're looking at, we've talked today all about cost and inflation and everything else. And that was what people voted on this year, at least in my opinion, was that they voted on the fact that everything is incredibly expensive and nobody seemed to care about it, or at least gave it a lot of lip service. And at minimum, look, I think
it's more like, what are you going to do?
Right. Now, do I think that, because you can pick out things when you go through the USAID piece, where maybe they cut some funding to a company that was doing cancer research. Okay. Do we want that? No. But there's a thing called zero-based budgeting. Have you ever heard of this before?
Oh, yeah.
Where you go into, and this is all done in most Silicon Valley companies, where they basically go in and they cut their costs to almost zero and say, okay, now we're going to build back from there what we can put in, because we got to get rid of all the waste in order to understand what it really takes to operate. And there's always pains with that. There's a lot of growing pains. But the idea, at least being put forth right now, is that if they can reduce government spending down dramatically, which they claim that they can, then that will cause inflation to start to fall, simply because just interest rates alone, if you reduce government debt, if you cut down government debt or government spending dramatically, that causes government bonds and 10-year treasuries to fall, because you have less being issued. So there's less supply on the market. And if that happens, then the yields come down. Well, if treasury yields come down, then mortgage bonds become more attractive in that market. And so interest rates for mortgages will come down. So if we're talking about the expense for housing, when you look at insurance, which you really can't control right now, taxes on your property taxes, they're trying to do some stuff in Texas, but they just passed the big thing about the $100,000 home exemption, which is great. But that's, there's only so much you can do there, because your value is going to keep going up. And then, I don't see the price of homes crashing anytime soon. They might slow down their ascent, which they have. Inventory is building, so that's a good thing, helping with the price of homes. But they're not going to crash 30% anytime in the next 5 years. So the only other thing that you can really impact to help with housing is interest rates. And if you can reduce government spending and reduce the 10-year yields, that will help reduce mortgage rates and bring stuff down. So do I like every single thing that they're doing? Do I like the idea that they want to make a luxury hotel in the Gaza Strip? This completely war-torn,
hey, maybe it works.
I don't know. I don't know how
he's trying to create a solution.
Yeah. I don't know how we went from America first to let's go own Gaza, but whatever. That's nothing. I'm never going to agree with everything that happens there, but I do like the way that things are headed, and I do think that in the long term, or at least over the next couple of years, I think we will see an impact on what we do economically. But I mean, do you see?
Mike, that's everybody's life.
Yeah.
I'm an insurance pro for Dave Ramsey.
Yeah.
And so when you're an insurance pro, you have to go through this program.
Yeah.
And it's very time consuming. So, but the very first thing they teach you is a budget.
Yeah.
Right. And it's a zero-based budget.
Yeah.
And you can't spend more than what you got coming in.
Yeah.
And when you do, you go into debt.
Yeah.
And when you're in debt, you're controlled.
Yeah.
Right.
Yeah.
When you're free of debt, you're free.
Yes.
Nobody controls your spending. Nobody
Correct.
controls. And so what most people don't realize is how being debt free can be freeing.
Yeah.
Right.
Yeah.
And so it goes back to what you're talking about to our whole country. Right.
Yeah.
But on just a micromanage this individual person, if we all lived within our means,
mm-hmm.
Can you imagine what a different place this would be?
Oh yeah, absolutely.
I mean, you look at people's stuff all the time.
Oh yeah. No, it's and it gets progressively worse too, because over the last couple of years, the money was flowing so well for every industry on the planet, just about, that people expected.
Debt was cheap.
Yeah. Debt was cheap. People expected their life to remain that way and continue that way. And that's just not the reality of the situation. A lot of people didn't save up very much money. And so then there became this phase where they went through of, okay, no, things aren't going as well as they were, but something's going to happen and we're going to get back to that. So I'll just take on a little bit of debt just to get me through the meantime, so I don't have to change my lifestyle. And now we're 2 years later. And look, trust me, if realtors and mortgage professionals and anybody in the housing industry is listening to this, they know exactly what I'm talking about, because this is the vast majority. We are what I call the canary in the coal mine as far as the economy is concerned, because we've been suffering for 2 years. And there's some people that have great years, and It drives me nuts all the time too. As I say, like, oh, and they're like, oh, I had the best year of my life. Okay, fine. All right. You're the outlier. Good. But most people are not. And the way that I always know that,
I probably worked 90 hours a week that year.
Yes. And I'm seeing this more and more these days. And I'm right there with everybody else, is I know the real estate's not going well because when I go on social media, everybody's on social media now. Everybody's got their commercial, everybody's got their video, everybody's got, that's still doing it. Now, obviously that's a channel to reach people, but at the same time, there were plenty of people that weren't doing that stuff before. And now when businesses slow down, you got to start doing it. So I know that people are out there, struggling and suffering with it and having a hard time. And, just to wrap it back to where we started with this, or in the middle of what we were talking about, is you have to make sure that every aspect of what you're doing in your career. So you have to help people all the way through, because if you want to get repeat business like you do, you have to help them if you're in mortgages or in real estate.
Them value.
You got to bring them value. You got to show them every step of the way where they can save money, where they can't. Explain to them why. If there's nothing you can do about this, there's nothing you can do about it. But you need to understand why. And then just walk them through that entire process. So that way, when they come out the other side, even if they don't decide to buy right now, or maybe they do decide to buy, but they go with someone else and they go through an experience that wasn't going to be with you, I know that you resonate, because I know you resonate with clients, because when you are one of the few in the industry and your insurance side of things that really walks and explains things to people well, even if they don't use you, they will always refer back. And I know that because I've sent people to you like, well, I decided not to use Brad, and they went with somebody else. And then I'll do another loan from her again. Like, oh, give me that guy's number again, because the other people that I went with were terrible. And, I don't want to go through that again.
Well, that's what I try to do for my referral partners is I'm not going to give you nothing.
Yeah.
I'm not going to buy you nothing. I'm going to give your customer a great experience.
Yes.
Right.
Yes.
And when I do, they're going to remember next time they buy the house, hey, Mike referred me to Brad.
Yep.
Right. And I'm going to call Brad back because he gave me good referrals.
Yeah.
Right. And he took good care of me. And so that's really what it's all about.
Yep. If you take away nothing from this, just take away the fact that if you're in real estate of any kind, get good referral partners. Just find people that you can tend to, not because they give you money, not because they give you perks, but because they take really good care of your customers. And if you want to have a sustained career and continue to do things even when times are slow, they're always going to go back to the people that they trust and that they know are going to treat them right.
Just about to say the same thing. And those people will be around for your career.
That's right. They'll be around for a long time, and you won't have to find a new person every week. So, all right. Well, thank you, Brad. Appreciate you as always. Insurance is certainly a topic that is not fascinating to me, but is incredibly important. I just, like everybody else, when you start talking about deductibles and coverages and all this kind of stuff, my eyes glaze over. But it's incredibly important, and you don't need to know it all the time. But when the time comes and you do need to have it, then you need to have a Brad. So if you know anything, walk away from anything from this, it's just make sure you have a Brad. Maybe it's not Brad, but a Brad of some kind. You need one. All right, brother. Thank you very much. Everybody have a great weekend, and we will see you next time.